makers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London with the conversations that matter. Here's what's coming up on today's program. The death toll from the conflict between Israel and the militant group Hamas has topped 1,100 as fighting enters a third day. Oil surged as much as 5% on fears of a supply shock as risk sentiment sours around the world, plus world leaders condemn the violence. The U.S. says it's sending military support to Israel, while Saudi Arabia calls for de-escalation. We'll bring you the very latest from the region. So let's take a look at the European markets map. Again, the focus firmly on what's happening in the Middle East. The main thing that's moving on the back of it is the price of oil. Now, there is nothing to suggest at the moment that we have the intelligence strong enough. This is what our Mark Champion argues in his column today, that there's intelligence enough to make an involvement or a proxy war with Iran and the U.S. But, of course, this is the big concern across the board. We saw a decisive move not only towards gold, bonds and dollar, but other safety havens. So more than 1,100 people have been confirmed dead in violence between Israel and Hamas militants as fighting heads for a third day. The U.S. has vowed to support Israel, moving an aircraft carrier strike group closer to the region. The Israeli Prime Minister Benjamin Netanyahu has vowed to strike back against Hamas in Gaza.
Hamas started a cruel and evil war. We will win this war, but the price is too heavy to bear. This is a very difficult day for all of us.
Well, 2 million people live in Gaza, a small strip of land on the Mediterranean, which has been blockaded by Israel for more than 15 years.
Israel cannot wage a full-scale war on a nation, its people, its land, its holy sites, and expect peace in exchange.
Now, joining us to talk about the markets and really the move to havens is Greg Peters, PGIM Fixed Income Co-Chief Investment Officer. Greg, it's always, and I know it's always uncomfortable actually to have to talk about, some of these havens where the death toll on all sides is so huge. But I guess the big concern is that this becomes a proxy war, that this becomes bigger, that this escalates, and we don't really know what the end game of that could be.
No, that's quite right. I mean, first and foremost, obviously, it's quite difficult to talk about. It's a clear human tragedy. But from a market standpoint, I think it does several things. First and foremost, it pushes down global growth, as energy prices are likely to remain higher. At the same time, it pushes up inflation, so it makes central banks in a much more precarious spot. And then it just adds even more uncertainty to the mix. And it's not like we haven't had enough uncertainty to begin with. So there's lots to digest here from a market perspective, but the initial move of safe haven makes a lot of sense.
So, Greg, what does it mean, for example, for the price of oil? Again, I know it's game theory at the moment because we don't know the implications of Iran. We don't know what that means for the Strait of Hormuz, what they have said that they could close off in the past. But are you expecting heightened volatility for the weeks to come?
Yeah, absolutely. And so oil has been really quite volatile the past month, right? We've seen this sharp spike up. It moved down. Now it's moving higher again. And no, I fully expect to see energy prices at an elevated level with a lot of volatility around it.
Greg, overall, what does this all mean for treasuries? Again, I know it's difficult at the moment because we're just on the back of a pretty horrific weekend. But longer term, does it have implications for central banks? Does it go back to inflation?
It does. It's hard to interpret at this point, but I do think the trend is still in place, right? If you believe that central banks are in this higher for longer camp and growth remains, reasonably positive, inflation's still coming down, then that means a curve has to continue to normalize. And so this move that we've had, I think, was just a realization that central banks mean what they say and that rates will remain higher, and there's no reason to have this persistently inverted yield curve. So I think that normalization process is still very much in play here.
Yeah, Greg, are we at the height of are we like peak interest rates?
Maybe on the front end we're close, but not on the back end. Once again, if you subscribe to this belief that we're in this, higher for longer and growth is normalizing as well, or it's stabilizing and inflation is moving towards trend, then that means the curve should have a normal shape to it, which means it shouldn't be inverted. So I would expect kind of intermediate to long-term rates to move higher here over the medium term.
Greg, what does this mean for fixed income? I mean, it was pretty wild in the Treasury markets last week.
Yeah, so I think all else equal, it's a really good backdrop for fixed income. So I know there's been lots of news stories around, 3 straight years of losses, but the flip side of that is that yields are actually much higher, right? And I think from an investing standpoint, earning today's current carry and yield is far superior than where we were 2 years ago. So to me, as prices move lower, yields go higher, of course, and those higher yields are really what fuels fixed income. So I think we're in a really good place, really quite bullish over the medium, longer term.
So, Greg, when you look actually your fixed income portfolio, what do you want to buy right now?
Still the same. I mean, I think it's a high quality bias, all else equal, right? This higher rate environment puts more pressure on the more levered cap structures, the more levered real estate plays. So, take what the market gives you. And what I think the market is giving you is high quality carry. And so that's what we're doing. That's what we're continuing to do.
Is there anything in Europe that looks attractive right now?
Europe is less attractive. We have a bias towards U.S. clearly. We think the U.S. is a winner here over the medium to long term. Europe is in a much more tricky spot for a variety of different reasons. So we're definitely dollar bulls and dollar buyers.
Anything in yen? I don't know if further afield, actually, if this is the right time to look at opportunities in fixed income.
Well, the moves in JGBs have really been important, right? So part of the buyer strike that we've seen in U.S. Treasuries, for example, is the fact that 10-year JGBs have really moved up substantially. So I think there's this home bias that is coming into play in Japan. I expect that to continue. But we see better opportunities actually in the U.S. and even Europe than we do Japan at this point in time.
All right, Greg, thank you so much. As
Thank
always,
you.
Greg Peters there, PGIM Fixed Income Co-Chief Investment Officer. Coming up, Israel reels from the deadliest attack on its soil in decades. We speak to Jerusalem's Deputy Mayor, Fleur Hassan-Nahoum. She joins us next, and this is Bloomberg. The conversations that matter, the insights you need. This is The Pulse. I'm Francine Lacqua here in London. Now let's turn back to our top story, where fighting between Israel and Hamas has entered a third day. Now, more than 1,100 people have been killed following the deadliest attacks on Israel in decades. Joining us now from Jerusalem is the Deputy Mayor, Fleur Hassan-Nahoum. Deputy Mayor, thank you for joining us. It's been a pretty horrific weekend. Have we gotten to the bottom of how this was possible intelligence-wise?
I think that the whole country is still wondering and in shock and in trauma how this could have happened. We don't understand it. We have a border with Gaza. We left Gaza in 2005. There's no occupation. And we really don't understand how a secure border with Israel's technology and Israel's very experienced army, how this could have happened, how they could have come in, gone in people's homes, killed babies in their beds, kidnapped old women. It's incomprehensible, and we're still waking up and hoping it's a nightmare.
Who is to blame for this in terms of the intelligence that was not picked up?
I really can't tell you. I'm not privy to the type of intelligence information, but what I can tell you is that once we get the situation under control, and once we can return the hostages, then there will definitely be inquiries and investigations as to how this happened and how this should never happen again.
Deputy Mayor, what do you think happens next? Do you think that this escalates? I know there's questions about an involvement from Iran, which is not 100% verified yet. I think a lot of people are hoping for the best, but we could see the worst.
Look, first of all, the U.S. is sending troops already to the region, which is a message to Iran saying you get involved and we'll get involved. And so that's encouraging for us. And I think at the moment, the priority is, first of all, to get the 40 terrorists that are still running around the south of Israel. We need to get them out. There are still gun battles happening with terrorists that infiltrated the south of Israel. So that's the first priority. The second priority, of course, is to stop bringing back the hostages, either by force or negotiation. I really don't know what's best. But Israel, we value life. And every life is important here. And we have to do our utmost to return the innocents. You have to, understand that these terrorists came in to kill innocents. There's never been a situation, there's never been a higher toll of citizen deaths than what we've seen in the last 48 hours in the history of the state of Israel. Normally, combatants are the majority of the killed, and there's collateral damage. In this case, it's been completely the opposite.
Deputy Mayor, there's also a growing number of international airlines that are suspending flights to Israel. What does that mean for Jerusalem?
Well, I'm dealing with the tourists that are stuck here at the moment. We had a big Christian festival last week. We've had Jewish high holidays. There are many tourists that are stuck in Jerusalem that are trying to get home. So that's our first priority. Then, of course, it's the people canceling flights. We can't blame them for canceling flights. And it's also the returning Israelis. We need to get Israelis back home. Many of them are essential personnel who were on holiday, and they're trying to get back home. The Israeli carrier El Al is still, of course, flying everywhere. Some of the foreign airlines are flying, some are not. We can understand that. And so it's a question of getting back our citizens and helping the tourists go home.
Thank you so much, Fleur Hassan-Nahoum, there, the Deputy Mayor of Jerusalem. Now, for more on the violence in the Middle East, Bloomberg's Stuart Wallace also joins us from Dubai. So, Stuart, what's your assumption about the potential for escalation?
Well, at the moment, there's not been a great deal of evidence that it will happen. Again, I should caution that we are in the very early stages of this conflict. But thinking back to yesterday, we did see some mortar fire coming in from the north, that is from Lebanese territory into territory held by the Israelis. But it was characterized particularly by the IDF, the Israeli Defense Forces, as relatively low level. Again, it's hard to sort of talk in those terms when we're talking about mortar fire. But it seemed to show that there was no appetite, at least for now, for Hezbollah to get involved. And again, as your previous guest said, you have the US deploying to the Eastern Mediterranean, in some respects as a deterrence for other actors to get involved, and again, particularly Hezbollah and Syria. So for now, and I do stress for now, there doesn't appear to be an escalation to other parties. But as you know as well as I do, in these circumstances, things can get out of hand rather quickly.
Stuart, what has the economic response been from Israel and its central bank?
So we've seen this unprecedented attempt to basically prop up the shekel and make sure the liquidity there is there for the banks. In terms of the markets themselves more broadly, we did see a big sell-off in the Tel Aviv Stock Exchange yesterday. That's to some extent been reversed today. But again, because, again, as your previous guest said, the fighting is still going on in the south, and there's no sense that this is going to end anytime soon. I think the economic outlook looks particularly uncertain. Looking more broadly across global markets, we saw, again, a big run-up in oil prices this morning. Now, that has modified somewhat. And again, no evidence so far that this is going to spread, which I think is largely what was driving that move. But we're on day 3 at this stage, and we'll keep watching and waiting for the rest of this week.
Thank you so much, Stuart Wallace there from Dubai. We're also just getting some breaking news from ISNA, which is an Iranian news agency. I'm told it's one of the major news agencies in Iran, saying that Iran has denied claims of involvement in the Hamas attacks. Coming up, we speak to the BlackRock Vice Chair, Philipp Hildebrand, on souring sentiment as the Israel-Hamas conflict continues. We'll also discuss the likelihood of a soft landing for the U.S. economy and much, much more. That's next, and this is Bloomberg. So global markets facing renewed geopolitical risk as the Israel-Hamas conflict escalates. Now, the dollar rebounding against most currencies as that risk-off sentiment spreads. Who better to join us to discuss the global economy and much more than BlackRock's Vice Chairman, Philipp Hildebrand. Philipp, of course, at the forefront of all of our thoughts is always the tragic loss of human life. It also put something in the markets, which is fear of escalation. It put fear on the markets of actually heightened security, where we don't know where this ends. How much volatility are you expecting in markets?
Look, markets will sort themselves out. This is always a typical when something terrible happens. So the first couple of days, there's a lot of scrambling. I think the bigger issue here is this is a manifestation of one of the longer term sort of forces on the supply side of the economy, linked to the fragmentation of geopolitics. And to me, what this means, it's yet another example of why we're likely to enter a much lower growth era where trend growth is going to head down, potential growth is heading down in all major regions, with the possible exception of Japan. And so this means this world of stickier inflation, low growth, and high interest rates is more likely to persist. And what we see here is one, in a sense, at the moment, regional manifestation of this fragmented geopolitical system that we're in, very different from the Great Moderation.
But Philipp, so could we see, and this really seemingly almost came out of nowhere in terms of the intensity of the attack, and I don't know why a lot of intelligence agencies weren't prepared for it. But away from that, could we see actually foreign policy and things like this be much more heightened that we're unprepared for?
It's very hard to tell how this could have happened. I'm not an intelligence expert or a security expert. Perhaps the answer lies in, on the one hand, very high-tech defense system and perhaps relatively low-tech approaches to how you evade high-tech defense systems. So I'm sure lots of experts will think about this. I do think it means, generally speaking, this kind of risk premium, in a sense, around geopolitics is much higher than it has been in previous decades. And that, of course, we've known for quite a while in Europe. This, to me, is another manifestation of this and has big implications on the kind of macroeconomic environment we're in, being very different. We call it a new regime, decisively very different from the past.
What did everyone calling for a recession actually get wrong?
I think the recession is less the issue. The reality is we have very subdued growth. If you look at the average measures of GDP growth economic activity in the U.S., you see that the economy has been basically growing at barely around 1% for the last 18 months. We expect that to persist. That will mean we'll have the longest period of very low growth outside of a recession, even if we can avoid a recession. In Europe, we're seeing flatlining activity. So I think the story is less about are we going to go into a recession or not, but much more about the reality that's beginning to sink in, that we have moved to a much lower growth environment than what we've seen in the past.
But do you think interest rates have peaked?
Hard to tell. We're probably close to it at some level. I think the much more important story is that because of all these supply constraints, including geopolitics, but not only, what we're going to see, despite the kind of waning of the pandemic-related distortions that will bring inflation down quickly, I would expect U.S. inflation to be at 2% by mid-next year. But the reality is going to be that, for central banks, this new macro environment will mean they will not be able to cut rates the way they have done in the past. So we're going to see a very different reaction function, lower potential growth, higher rates, higher neutral rates. And so that's going to mean that this classic response to any problem central banks ease aggressively, that is very unlikely to be the play, as it were, in the years to come.
So would that be accompanied by a credit crunch? Right, so savers not being able to pay their credit cards.
We'll see. It's hard to tell. Cracks will show up when you have a very different environment. We are now in a very different environment. Stickier inflation, it will come down, but it'll remain sticky. Probably a kind of semi-permanent bias towards tight policy, higher interest rates, and relatively low growth. That means weakness will reveal itself, whether that's in government balance sheets. That's a story we're seeing in a number of countries, whether it's in corporate balance sheets, in business models, as we've seen in the past in the financial sector. So I think this will be generally an environment where weakness, whether it's in balance sheet, business models, or strategies, will reveal themselves. So there's going to be, I think, great differentiation between economic outcomes, between those that are solidly positioned and those that have fundamental weaknesses.
But Philip, what you're explaining, so the markets hasn't really latched onto that. So what does that mean for if the market reaction function means that actually central banks can't do much? Where do you find value in markets?
Well, I think the market is beginning to look at it. If you look at rate expectations on a forward basis, we're beginning to see that they are basically shifting. I think the main implication is that we are not in a normal business cycle kind of environment. We're going to be in a much more sticky inflation environment, and rates will not be able to come down to respond to weakness. So central bankers, in other words, will be constrained.
Yeah.
They will be facing trade-offs. And that's a very different world that will manifest itself. And I think that's the most important conclusion we can take away. And what happened tragically over the weekend, to me, is in a sense yet another manifestation of these longer-term structural forces, whether it's demographics, the transition to net zero, or geopolitics.
Philip, thank you so much. Philipp Hildebrand, BlackRock Vice Chair, stays with us as we continue to look at economic shocks, geopolitical tensions, and of course, everything else. This is Bloomberg. The death toll from the conflict between Israel and the militant group Hamas has topped 1,100 as fighting enters a third day. Oil surges as much as 5% on fears of a supply shock as risk sentiment sours around the world. And world leaders condemn the violence. The U.S. says it's sending military support to Israel, while Saudi Arabia calls for de-escalation. Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, still with us, Philipp Hildebrand, BlackRock Vice Chairman. And Philip, I know both you and I will go to the IMF World Bank meetings in Marrakesh. A lot of the focus will definitely be on yields worldwide at 5% and what that breaks, what it means for this new economic reality. Do you worry about what a higher for longer 5% yield means?
Yeah, I think it's, alone, yes, of course, any investor has to think that's a different world. It also creates great opportunities. You can, as we've seen, cash has become a very attractive asset class when you can pick up 5-6% over a few months. But I think that the bigger issue that the fund really should, hopefully will frame the discussions over the weekend is how does this new environment of, these sort of three dimensions of stickier inflation, less maneuverability by central banks, lower growth, and higher interest rates, how does that change the dynamics of the economy? And what does that then mean for markets, for people like you and me? I think that should be the framing of the IMF, and I hope they really start to pay attention to these new structural conditions that are underpinning, the global economy, with very few exceptions. So
if you had to put a trade now for the next, let's say, 5 to 10 years that you wouldn't touch, what would you bet on?
I think what we have been telling our clients that you need to move away from sort of the traditional last 40 years bonds versus equities asset allocation framework, 60-40, and move to a kind of much more thematic approach. So, take a few examples. The transition to net zero is going to mean big allocations of investments over the next decades. Security, resilience, the kind of rewiring of globalization in quite a different way. I mean, GDP, trade as a share of GDP, if you look at it over the last couple of years, it's completely plateaued after years and years of, a kind of one-way trend. These kinds of themes, AI could be another one. I think we need to completely rejig, in a sense, the way we think about allocating and investment themes, as opposed to just saying, oh, this is a great environment for bonds or this is a great environment for equities. If we're going to be in a world with lower growth, higher inflation, and higher rates, beta is not going to, in a simple way, give us the returns that many of us need for our clients.
But this is a massive shift, actually, for all of the finance industry.
I think it's a huge shift, which is why I would appeal to the fund to really focus these discussions around what does this new regime, these new structural dynamics mean, and move away from kind of being caught in the decade-old, business cycle logic that we've been, we have a problem, rates will come down quickly. They won't. And I think we have also a generational problem. Most people in this industry have never seen anything like it. I always joke around the firm when I say, Larry Fink is probably the only employee at BlackRock today who ever really traded bonds on the short side in his career. So there is a kind of a collective memory that is simply missing in all organizations today.
When you look at what does this mean for currencies? So I know euro, for example, is not off parity. I don't know whether these shifts, as also a former central banker, this is something that we sometimes, if not misunderstand, understand the significance of it less than we would have 10 years ago.
Yeah, I don't think it has to necessarily mean very much because a lot of these forces are going to be global. There are some exceptions. Japan is in a different place right now. But if you look at the kind of what I said earlier, the flatlining of growth, the very low sort of growth dynamics in the U.S., those kinds of things are happening globally, sometimes for slightly different reasons. But, that tells me that currencies are a relative asset class, something I learned very early on. And so in a world where some of these trends are kind of are all pervasive throughout the entire global economy, or much of it, it doesn't necessarily need to lead to great currency volatility.
Philipp, what are you most looking forward to actually at the IMF World Bank meetings in Marrakesh? Again, I know a lot of the focus will also be on the ground because of the devastation, because of the earthquake. But we have a lot of the banking community also coming. And I guess, it's still inflation, right, that they'll focus on.
I think they should focus on structural change, whether it's the change from the banking system, migrating much of it or important parts of it to the capital markets, whether it's what does it mean to have this new macro environment that I talked about and not get caught up too much in the old frameworks of day by day, but rather use this as an opportunity to think through. If you look at the articulation by central banks of this new world, there's still a lot of work to do. I mean, the one I think that articulated it very well was Christine Lagarde in her speech at Jackson Hole. To me, that has been so far the most honest and frankly most comprehensive speech by a central banker to try to describe these new forces. So I think we need to get clarity on what we think is going to happen over the next decade, how this new era is different from what we've all lived through, the Great Moderation, and no better place to do this than through the leading finance and ministers and governors.
Do you think, Philipp, that actually the fragmentation and deglobalization of the world continues? Or have we seen, are there more supply chains?
Well, I think, the problem with these supply constraints is some of them we could fix. We could fix relations between China and the U.S. And there's a delegation of senators arriving in China, so there are some perhaps hopeful signs there. The war could be ended between Russia and Ukraine. So some of these things can be fixed by policy, by decisions, by courageous people. Unfortunately, some of the other ones, the transition to net zero, which will lead in the short to medium term to higher energy prices. The most obvious one is demographics. A vastly kind of aging society will lead, absent all other things, to lower growth rates. And these things we cannot really change. And so it's a mixed bag. The forces that are kind of structural and really can't be changed very much by policy are unfortunately a big part of the story.
I think it's actually the first time we also hear from the new PBOC governor that he's on the international stage in Marrakesh. What do you expect? Again, how should we deal with China right now?
I think that the question there is can they and are they willing to deploy some policy instruments, and they have them, to create easier conditions. Yeah. They don't have an inflation problem per se, so they could, but of course they've got structural financial system problems that probably will constrain them also in deploying these policy tools. And I would expect, frankly, to have a fairly consistent approach relative to the previous governor. But that will be interesting to see if anything changes as a result of the change at the top of the central bank. The central bank, in my experience, and I've known the last two governors very well, has always been very professional, very sophisticated, very competent, and I would expect that to continue. Whether we'll see a change, I would doubt it, but we'll see as we hear what the new governor has to say.
Philipp, thank you so much, as always, to also get us started for our IMF World Bank coverage. Philipp Hildebrand, there, the BlackRock Vice Chairman. Coming up, oil higher after Hamas's surprise attack on Israel, stoked supply concerns. We'll discuss that next, and this is Bloomberg. The conversations that matter, the insights you need. This is The Pulse. I'm Francine Lacqua here in London. Now, oil gains on fears that the worst attack on Israel in decades could roil the wider Middle East, home to almost a third of global supplies. Well, Bloomberg's Youssef Gama Eldin joins us now with the very latest. Youssef, big moves on the oil price. Now, this is not because there's an immediate threat to it, but actually if there was a proxy war involving Iran and the U.S., then I guess all bets are off.
100%. So this is all about Iranian oil exports, which made a bit of a recovery so far this year. In fact, all the incremental barrels are coming from Iran. So we're talking about 700,000 barrels per day. But as RBC and many others in the notes that I've gone through, so Goldman Sachs has chipped into this as well, and Citi, basically, if the United States sees Iran as responsible in the attack, then those oil exports could come back down, creating an even tighter market. And then OPEC Plus, they're also not looking like they're willing to move. So we heard from the UAE energy minister, the Saudi energy minister late yesterday, and they weren't willing to talk about politics. They say OPEC Plus is unified and they will act as they need to.
Yeah, and Iran in the past has also threatened to close down the Strait of Hormuz, right? And that's the passage for a lot of cargo shipments and a lot of oil shipments, not only Iranian oil.
Absolutely. So, I mean, this is something that's, come and gone over the last 2 to 3 decades. And the scale of the amount of energy that flows through the scale of Hormuz, to the tune of 17 million barrels per day, if it comes to an Iranian involvement, which maybe might be in response to any attack on southern Lebanon, then you would have potentially some problems there, although the UAE and Saudi Arabia are going to be very keen to do what they can politically to make sure that it doesn't go that far, because they've invested so much in their respective economies, be so much to lose.
Youssef, thank you so much. Youssef Gama Eldin there with the very latest on oil. Now, the international community is also weighing in as the fighting between Israel and Hamas continues, with hundreds of Israelis and Palestinians killed since the conflict began on Saturday. Let's go straight to Bloomberg opinion columnist Mark Champion for more on this. Mark, you have a smart and measured column out today. What's your take on the latest escalation of the conflict between Israel and Hamas?
Yeah, well, I think, Israel's in a really difficult position. Hamas conducted this attack with maximum brutality and, put it on camera. So they know that Israel is going to attack Gaza, and that has to be part of their plan or their planning. It's now up to Israel to figure out, how do we do that? How do we achieve what we have to achieve when Hamas not only holds, more than 100 hostages, but also, expects us to do, to make this attack, and then what happens elsewhere? What happens with Hezbollah from Lebanon? What happens with, Iran? How do we avoid this becoming a wider war? Very, very difficult.
So, Mark, your latest piece says the Prime Minister, again, has set out a good framework for Israel to respond. Tell us more about the plan. And I guess what you're saying is that, if it's not measured, then how bad could everything get?
Yes. So essentially what he said was, first of all, we need to clear out the remaining Hamas fighters from, the border area, secure the border. So that's clear, that's doable, non-controversial. Then the next thing is to exact a price on Hamas. And so that's a quite flexible, term. It leaves them, a lot of maneuver room for just what that price is. And he says it will, include going into Gaza. That's inevitable. But at the same time, he says that we need to, secure our borders to make sure that, we don't have other parties, moving into the conflict. So that it shows that they seem to understand it's a balance that they need, that there is this risk of escalation, which is quite real. And then finally, unity within Israel. It's been extremely divided recently, and a level head, which, all of which is exactly what they need to do. Whether they'll be able to, given the nature of what Hamas has done, is really very, very difficult. I mean, it's a tough proposition.
Mark, what happens next? I know it's difficult to call out exactly how it will go. We heard from the Jerusalem Post that the Israeli army plans to call up to 300,000 reserve soldiers. Like, what do we know about Iran and China in all of this?
Well, what we know about, China has simply said, as it always does, we call for de-escalation, etc. And there's no particular reason to think that China's, had a hand in any way. Iran, on the other hand, is an important financial backer of Hamas. There are reports already that Iran, at the very least, discussed and gave a green light to what was going to be done. Iran has a clear motivation in the sense that Israel was close to striking a normalization deal with Saudi Arabia, Iran's kind of main rival historically in the region. And so that, both, there was a kind of meeting of interest for Hamas, which had been, the Palestinians have been marginalized by this normalization process, and Iran, which also stood to lose. We need to really make sure of exactly what Iran did, because the implications, if Iran orchestrated it and was materially behind it, that those implications are quite severe. You could then be talking about a confrontation between Israel and Iran, which likely would draw in the US. That has enormous implications politically for the number of fatalities that you're going to see, and for things like the oil price.
Mark, as always, thank you so much. Our Bloomberg Opinions, Mark Champion, joining us. And I would urge everyone to really go and read his terrific column from this morning. Now, coming up, we'll also be live in Liverpool for the UK Opposition Labour Party Conference. That's next. And this is Bloomberg. Now, Metro Bank shares are higher after the company secured a £925 million finance package deal, which imposes a 40% haircut on some bondholders. Now, the agreement sees Colombian financier Jamie Gilinski take a controlling interest in the British retail and commercial bank. Now, Metro gains some of much-needed breathing space after a tumultuous week that saw its share price whipsawed. Now, Bloomberg's Tom Metcalf, who oversees all of our finance coverage here in London, joins us. Tom, I know it's kept you busy over the weekend. I mean, this was a huge deal. It was kind of like on the brink. It wasn't. Now it has a lifeline. What exactly could it go? I mean, what went wrong at Metro? Could it go wrong elsewhere?
Yeah, it's been a frantic weekend, so apologies if I make even less sense than normal. But no, it is a big deal for UK banking. I think it's, to your question, is there sort of kind of more sort of, contagion or anything like that as a result? That doesn't seem to be the case. Very idiosyncratic things were happening at Metro Bank. There's various reasons investors had kind of been spooked over the previous month or so. And I think, what we are seeing is a new Metro Bank emerging. So now Gilinski has will have a 53% stake. That's up from about 9%. And it's interesting that really, over the weekend, there's all sorts of sort of rumours and stories flying around. Might there be a white knight? Ultimately, what happened was the existing investors were, effectively made the decision they will go in, retain some kind of control, etc., and put a lot of more money in the bank.
So what does this mean for Metro going forward? Do we have a blueprint of how it could change after that lifeline?
So in the statement that they released last night and then updated today, all the messaging was like, we've been in the bank for 3 years, we sort of see the strategy working, now we've got a bit of breathing space. So I don't personally see any immediate changes. But what is interesting is, why is Metro Bank different? It's because of that big branch network, which is very glitzy, very expensive to run. And I guess that is one question, is do they try and save costs somewhere by perhaps sort of rowing back on the free dog biscuits, for example, that they give out there?
Tom, overall, I mean, what was the most surprising thing, actually, in how it unfolded so far? It's been, again, a pretty tumultuous 7 days for them.
Yeah, exactly. I kind of jinxed myself on Friday. I was telling people, I don't think anything will happen this weekend. And then, by Saturday, I realised the error of my ways.
That's a rookie mistake.
Yeah, I know. It's silly. I think in part, maybe the speed. And for me, the most fascinating thing is all this current episode really came from the PRA telling the bank, we're not going to, let you use your internal modelling. And it's just such an intriguing situation because obviously you've got the PRA saying that for good reason, but at the same time they don't want a bank like Metro to hit trouble. So they were in a kind of intriguing situation there. There's that dynamic. You know, what did they want to see in this situation? And then, of course, you know, huge amounts of new money going in. Shareholders, bondholders reacted positively today. Yeah. But, you know, what does the future hold? And you know, that's an open question after a couple of years.
Tom, thank you so much. Tom Metcalf there, who oversees all of our finance coverage here in the UK. Now, UK opposition leader Keir Starmer has kicked off his annual party conference in Liverpool as he attempts to portray the Labour Party as a government in waiting. Well, Bloomberg's UK correspondent Lizzie Burden joins us from Liverpool. So, Lizzie, I know he talked about Israel, which we'll get to in a second, but basically this is a blueprint of then his campaigning into the election. What have we learnt from Labour?
Yes, Francine, this is the opportunity for Keir Starmer to set out his stall, as you say, ahead of the election that we're expecting in 15 months' time. This is business day at Labour Party conference, even though Israel does put a sombre mood on the conference here. We're expecting to hear from the Shadow Chancellor Rachel Reeves at 12 p.m. She'll be burnishing her green credentials as a means to grow the economy, as a means to fund public spending, as a way to keep Labour fiscally responsible. That's the reputation that they need to present if they are to hang on to their double-digit poll lead, about 20 points as it stands. So Keir Starmer's message to his party is going to be to keep focus and not to sacrifice that lead in the polls. But I was speaking to Darren Jones, the Shadow Chief Secretary to the Treasury. I asked him, given they've had this poll lead and given they've had it for so long, are they going to be complacent? Take a listen.
Our announcements are pretty bold. We're aiming for the highest, most sustained economic growth in the G7. We want to decarbonise the power system by 2030. We have to fix the NHS, which is a huge problem. You'll hear a lot today from Rachel Reeves about building the national infrastructure this country needs. All of those things are pretty bold, big pledges that we are very ambitious for delivering for the country.
So we're going to hear more about infrastructure and investment from the Shadow Chancellor in her speech. Back to you, Francine.
Yeah, it hasn't been, of course, a Labour Party without controversy in the past when it came to anti-Semitism and things like that. What's been Keir Starmer's reaction to what's happening in Israel?
Well, he's condemned the attack by Hamas in the strongest terms. He's said that it's appalling. And actually, behind the scenes, even though this is dominating the conference on the first day of the week, actually his aides say that he's pretty sanguine about it. It really does underscore just how far the party has come since the leadership of his predecessor, Jeremy Corbyn. You'll remember Jeremy Corbyn, before he was Labour leader, was happy to share a platform with some of the supporters of Hamas and Hezbollah. And even on Friday, Jeremy Corbyn posted on X, emphasising the impact of Israel's occupation and passing up the opportunity to condemn the attack. So it's against that historic backdrop that Keir Starmer has returned to this more traditional foreign policy stance.
Thank you so much, Bloomberg UK correspondent Lizzie Burden with the very latest, of course, from the Labour Party conference. Up next, Bloomberg Brief. This is Bloomberg.